on to another stock that was in focus, and that is Tata Motors, that reported a healthy set of numbers for the third quarter. Revenue has come in line with expectations. However, the PAT, EBITDA and the margins have surpassed all expectations. The automaker said its JLR margin has more than doubled compared to the same quarter last year. Going forward, Tata Motors said it is positive on all of the three of its auto verticals. My colleague Shrishti Sharma is joining in with all the number crunching and more.
Well, yet again, a great show by Tata Motors, and the showstopper was clearly the JLR division, which delivered another great set of performance, especially in the terms of the EBIT margin, which clocked in at 8.8% for Q3 FY24 versus our estimate of just 7.4%. And not just that, if we look at the JLR free cash flow as well, and that's coming in at a whooping £626 million in Q3 FY24, and that's almost double what the company reported in Q2. So across the board, we are seeing great performance by the company, where the company also highlights that all the three cylinders of the company, the JLR, PV as well as commercial vehicle business, is doing well, and the demand momentum is seen to be sustaining. Let's take you through the numbers then. Revenue has seen a jump of 5.2% on a quarter-on-quarter basis. EBITDA has been up by 12%. The margins on a consolidated basis has also improved from 10.9% to 13.9% on a YOY basis, and that indeed is better than what we were expecting. And lastly, onto the profit figure, versus our estimate of 4,660 crores, the company delivered 6,952 crores in terms of the profit. The net automotive debt has been reduced by 9.5 crores, and this is now standing at 29,200 crores. If we talk about the other positive, then the company does say that the guidance given by the company in terms of the debt reduction, other than that, the free cash flow generation, they are on track to deliver on that. And just a point for their JLR EBIT margin guidance, the earlier guidance was to achieve 8%. Now the company is confident that for FY24, the JLR EBIT margin could be above 8%, so that's indeed another positive. On to the other segmental performance, the outlook for the commercial vehicle business is that it's expected to improve in the Q4. The bus segment is seeing a good demand. But from the passenger vehicle segment, the key highlight was the EV business EBITDA margins pre-R&D spends were near the break-even point, and the company is positive that in the times ahead it will turn out to be a positive number. So across the board, good set of numbers coming in from Tata Motors.
As far as that business is concerned, the small commercial vehicle business, we have split the business into two, where the trucks business is managed separately and the small commercial business is managed separately within the commercial vehicle business. And as we pull that together, I think the focus on a B2B2C compared to a typical B2B business that trucks were will mean slight different in approaches to how we go to market with that. That work is underway, and we are pretty confident that as we get that piece sorted out, as well as ensuring that we get the financing lined up and the overall market pickup happens, this business should come back on track again. But given that it's a shift in the way we are approaching this whole space, it'll take a few quarters, 1-2 quarters more for us to get this back on track.